We have with us Siddharth Tipnis, who's the partner and technology sector leader at Deloitte India, joining us. Siddharth, great having you. Let me first start off and maybe get the 30,000 feet view first. Try and get a sense as to what is the current urgent need or the need of the hour, if I can call it, where tech is concerned, and what should the government do in terms of budget and policy to try and help the sector, in your opinion?
First and foremost, thank you, Harsh, for having me, and pleasure, as always. So, three priorities. India is evolving as a data center hub. So potentially, I think accelerated. There has been a policy in the works, which is in draft stage, our national data center policy. I think there's been a lot of local investment, hyperscaler investment, and a lot of domestic demand, which is likely to have a big tailwind to infrastructure or digital infrastructure as a theme. So I think an adoption or some steps in that regard, where there's sort of more fiscal incentive towards digital infrastructure, is something which we see positioning India as sort of the next hub, if I may call it that, for digital infrastructure, which includes data centers, includes AI infrastructure. That's probably, I think, one key expectation which we are looking at very, very closely. The second one is, I think there's been a good success around promoting technology-led manufacturing here. So the PLI as an instrument towards attracting more investments in varied degrees of electronics, technology manufacturing has been happening. So probably, how do we increase the envelope of some of that, right? And then last but not the least, I think whether it is R&D, innovation, or promoting all the AI-led transformation which is happening around us, I think more allocation towards R&D on, let's say, the Anusandhan mission or the India AI mission. I think those are probably the three things which we are expecting in some way or form or shape at the budget this year.
Okay, and Siddharth, this move on visas that the US has taken and the kind of restrictions that this poses for India, what's the kind of opportunity that one can make of this? Because with every headwind also comes its set of opportunities. Is GCC a real opportunity within this entire evolving environment? And how are your clients, your companies that you service, how are they dealing with it?
So I won't say necessarily visa is a driver, or some of the issues around that are a driver to the GCC expansion. I think it's been a very, very robust story for the past few years. I think at give or take, we have roughly 1,1700 GCCs in India, and we see that momentum continuing over the course of next 4 or 5 years. So I think that story has always been fairly robust, notwithstanding all the sovereign visa and other restrictions in some form and shape. I think what is even more heartening to see is today many states are also looking at growth in global capability centers as a very, very major focus area. And you probably saw a peak of that at Davos as well, where quite a few states were chalking out their plans to attract investments in their provinces. So I think we continue to see a lot of that momentum continue, and but that's probably more of a state-led intervention, because this as a sector has been maturing for the last 10-15 years. So not so much necessarily at a fiscal level, but many states, right, whether it's been Maharashtra, Telangana, Karnataka, UP, I think those have already have chalked out quite a few, and then even others such as Tamil Nadu and many more, right, which are attracting investment. So that I think is expected to continue.
What are the gaps today within IT? Is there enough R&D being done? Are we investing enough in today's AI environment? What's it looking like on ground, and how can the budget probably spur things which have been probably a little sanguine, if I can call it? How do you propose that gets taken forward?
So I think steps towards that have already happened in the last couple of years. So there's been fair amount of earmarking. I think the Anusandhan mission, investments in our India AI, I think that's already been announced in the last couple of years. As you rightly said, more acceleration of on-ground spending, possibly more executionable announcements around that could be something to think about. And if you take a macro view, clearly, I think even India as a nation, about 4 trillion economy, technology being roughly about 8 to 10% of that, we are, and the allocations which are happening, I think we still need to do a lot more. So I think the announcements which have happened the last budget, 20,000 crores, are significant. We expect possibly some of that to happen more. But also, how can that be actually made actionable, spent, executionable on ground? More direction around that is something we could think about as well.
How should the government incentivize that? For example, there's data centers, there's a large need for data centers, and now you've got some of the premier IT companies actually investing in data centers. What are the gaps looking like with regard to new age tech, AI and the like? And how can the government actually give a fillip? Could there be, for example, a Section 35AD kind of deduction for some of these investments which companies are making to try and fill the gaps and not over rely on imported technology?
You're bang on. And the national data center policy I alluded to actually talks about some of that. Accelerated depreciation, incentivizing energy sustainable investments in data centers, also tax holidays. Some of these have been recommendations in the works, and hence our view that possibly formulation of the policy and again execution of that and giving it fiscal incentives which drive a lot of that centrally could also make a lot of sense. Again, on data centers, there's been a lot of domestic policies by various states to, attract investments, provide tax incentives, provide energy incentives, have a single window clearance, make things easier for doing business. So all of that have happened. But I think to centrally do this from a fiscal perspective and extend some of the benefits under the central under the direct tax regime could actually make a lot of sense.
Thank you so much. We leave it at that, actually. All the time we have for that. We can go on and on, but thank you for coming in and speaking with us, Siddharth. We have with us Madhumita Mohapatra, partner and defense lead at Deloitte, to talk to us about what to expect and what to pencil in. Ms. Mohapatra, let me first start off by understanding from you whether we can expect a double-digit growth on the defense spend, firstly. And secondly, how much of that can we expect in terms of capex? Will capex as a percentage go up? 30% is the target. I mean, typically, is that the kind of number we can look for this time around?
So if you actually read the signal from the last 3 to 4 budgets, I think the government has been deliberately incremental rather than dramatic. Other than as we just now saw, I think in 2023 it has gone up. But based on this trajectory, I think we would see a 7 to 9% increase in the overall defense budget spends. And I think a more realistic outcome in terms of capital expenditure, I think we should be stabilizing around 27 to 29% range approximately. And I think we would be continuing an upward glide rather than making a sudden leap. is what I feel in this. So I think where we would be looking in terms of an outlay for growth would be on platforms, in sensors, in ammunition, and of course aligning our network centric capabilities with indigenous manufacturing, which is absolutely key for us.
Be a separate allocation, Ms. Mohapatra? Are you expecting that for new and emerging technology, AI and the like? Is there going to be a specific allocation to that, in your opinion, and should there be?
No, so I think the real shift that is needed in this budget is not a large standalone AI or a drone fund, but actually we should re-architect the entire defense spending to treat all these emerging technologies, as you know, which has become so important, as core war fighting enablers rather than some experimental add-ons. So, we should be looking at multi-year allocations within capital and R&D heads instead of, looking at fragmented scheme-based funding for these particular AI and drone allocations. And of course, there is a larger discussion around cyber spend. So in terms of cyber spend, it cannot now be treated as, as a head which is buried within IT or communication budgets. We have to look at a distinct cyber capability head, I would think.
Okay, that makes sense. What specific reforms would you expect to see, or would you want to see, if I can call it that, to shorten the time frame for approval processes and procurement processes to ensure that actual delivery and impact happens far quicker than what we've been seeing on ground?
So I think that is a challenge that we've always been looking at in terms of procurement life cycles. Currently, where we stand, I think India's defense procurement challenge is no longer about, those protracted approvals, but it is about the time to delivery. I think we have to look at how we shift from one-off approvals to program-based clearances. We should definitely do away with, sequential decision bottlenecks, which are actually, focused on, delaying the timelines for procurement. I think we should also defocus on rewriting procurement manuals for sure. And we should be looking at outcome-driven contracts. We should be looking at program-based clearances. We should be looking at parallel trials, which speeden up, simulating and testing of equipment, and then looking at time and tried tested, vendor authenticity and credentials in order to ensure vendor accountability to translate these into definitely less challenging statuses for procurements.
Seeing better traction from an indigenization standpoint, from a India self-dependency kind of standpoint, and do you believe that we're moving in the right direction in terms of the pace as well as the direction?
See, I think we are moving. We are definitely on the path of encouraging manufacturing from tier 1, tier 2, tier 3. Actually, tier 2 and tier 3 vendors for sure. But how can we actually ensure that it is translating into something which is, strategic in terms of dealing with our indigenization priorities? It would be only if we, we shift our policy from not only encouraging manufacturing capabilities, but to de-risk investments. We are dealing with smaller tier 2 and tier 3 players. I think private players will only invest at scale when the demand is predictable and the execution risk is shared. So for an MSME, what will matter is to ensure that, there are export facilitations, there are faster payment cycles. So unless we actually look at all of those and give them a long-term visibility in terms of multi-year orders, we will not be really putting them on the progressive path by encouraging manufacturing. We have to de-risk investments, and we have to ensure that MSMEs and tier 2 and tier 3 players are given a faster, execution capabilities in terms of de-risking investments as well.
And measures to boost exports. So one is, of course, becoming self-sufficient ourselves, but thereafter it will be about serving the world as well. How close or far are we from doing that, in your opinion? And what policy measures should be taken to kind of boost that? What are the on-ground practical difficulties which need to get overcome to kind of give Indian MSMEs that boost?
So we saw the India-EU trade deal yesterday.
Yes.
I know that this does not immediately transform defense industrial cooperation overnight, but I think what we have done is by in taking forward these kind of trade deals, we are ensuring that we are reducing cost inputs for defense manufacturing, and we are altering revenue assumptions in the way the union budget will need to account for over the next several fiscal cycles. So how would we help is that, if we want to become a global hub, we have to hinge on reliability and predictability, not just price competitiveness. And we have to have the government backing the financing. We have to make sure that we are supporting, through the entire cycle, and especially at the deal closure stage. So I think to ensure in competitive markets, we are becoming a global hub. These kind of, reforms will definitely help.
Ms. Mohapatra, it's been a great chatting with you. Thank you so much for coming in, giving us that outlook with regard to what to expect from the union budget for the defense sector in particular. It's a large sector, and it's going to be something that a lot of market participants also focus on. So thank you for coming in and having that chat with us. We're joined by Anthony Prashant, partner life sciences and healthcare at Deloitte, to talk to us about, what to pencil in with regard to the budget. And of course, it's one of the crucial sectors where we've seen reforms in recent years. But what's the kind of allocation, Anthony, that we can pencil in this year from the union budget? What are the gaps that are required to be kind of plugged with the kind of allocation we will get?
Be here in this conversation. So just to quickly touch upon, how this has been over the last 2-3 years, and then taking that as a point, we always are in the target of reaching the 2.5% of our GDP. But if you look at this year or what was last year, it was close to 1.84. But it's a gradual growth. So we think there will be a lot of focus this year. When the allocation happens, it will be more towards a set of priorities. And I think it will be scaling up the Ayushman Bharat Digital Mission, because that's now reached a national scale. We have around 60 to 80 crore, 70 to 80 crore accounts, more than 3 lakh facilities. So I think there will be a big push coming from that end. And also with the DPA, which has come in, which has also given us a legal backbone for data consent and privacy. So we see a lot of allocation that will come in that front. Another allocation which we are expecting is also in the area of innovation, especially in R&D, because today, if you look at the industry, today it's around $60 billion, and we are trying to be a $130 billion industry by 2030. And this is a number which many of us have talked in many forums. And there's also a target which people are looking at further down, at least looking at a $400 billion industry. Now, if we have to reach that number, a large emphasis has to be given on R&D, especially in the area of biologics. Today, we are more generics-driven industry, but a lot of emphasis has to be given in the area of biologics. So, therefore, in R&D, we will look at more as an outcome-based incentive rather than an input-based incentive. So, number of patents, number of new molecules that we come up with, that's something which we also see as a second area that will be a more allocation going towards too. And also, one more area that we will also be looking at is from a medium term is
given the tariffs volatility which is happening, and also the US pricing regulations, and also some of the supply chain concentration risks, um, coming up with innovative models, especially for more private participation in this and for boosting production, that's something which we will see a lot of allocation coming up.
So lots of areas to watch out for. Anthony, hi. On the taxation front, are you expecting any tax or deduction reforms related to capex and R&D spending for pharma, medtech, or any of the healthcare services?
Yeah. So, see, when you look at from a tax or tax perspective, the industry sentiment is primarily aligned on three areas. One is, like I said, R&D support, where more focus to be given on in-house R&D and link it to outcome-based models. Again, it will complement the PRIP grants and the PLI scheme. Because today the industry is shifting from a volume to an innovation model. So therefore, we will see some of those interventions there. And also the discussion has always been on these input tax credit refunds, because our output is at 5% and but input is at 12 to 18%. So there's a large, huge tax credit that is available. So how can we address some of these? So that's one big area. And again, for manufacturing organizations, I think are targeted. Maybe this GST ITC fix is very important, because if we want to be looked at the pharmacy of the world, and especially when I spoke about hitting that $130 billion industry size, and therefore more manufacturing output, I think this GST ITC fixation needs to be done on priority. And that's where we look at it. The second thing, and since you specifically asked about med devices, I think that's an area where we should look at policies for improving production in India. Today, 80% of our medical equipment are imported, and therefore any reforms that can fast track both incentives and approvals will drive the medical devices sector as well. And that's something which can also reduce import dependency.
Anthony, thank you so much for your time.